Hello everybody, this is Lara with your weekly video for US oil for the week ending Friday, or Thursday, 6th of April actually. New York's closed for Friday, for Easter, Good Friday. And happy Easter everybody. This week oil is back within a consolidation zone. Upward movement invalidated a previous bearish Elliott wave count, and so this week I have a bearish and a bullish count. The bearish count will be dominant, but it still expects a bit more upward movement, a short-term target 84.16, and it expects price to not move above 93.75. When upward movement is complete, that'll complete a B wave, and then I'll expect a C wave down to find support at the big channel on the monthly chart. That's the main Elliott wave count. However, if we see a new high above 93.75, that would be a very extremely bullish signal, and then my long-term target would be 257. That's the new alternate Elliott wave count. Elliott wave analysis first, classic analysis last, and it's time to step back this month and look at monthly charts. This is the monthly chart for US oil. It sees from this high to this low a completed counter trend structure, a double zigzag, and I'm labeling it Super Cycle Wave 2. The first zigzag in the double is complete down here. It's labeled Cycle W. The double is joined by a 3 in the opposite direction labeled X. The second zigzag, labeled Cycle Wave Y, moves substantially beyond the end of W, deepening the correction. X is relatively brief and shallow compared to W and Y. This has a normal look for a double zigzag. It has a strong slope. It's not a sideways movement. I've drawn a channel around this double zigzag from its start to the end of X here with a parallel copy on the end of W, and this chart is on a semi-log scale. This trend line is very important, and we'll look at that more carefully on the weekly chart. If 2 is over here, then 3 should have begun, and 3 must subdivide as a 5-wave impulse, which will be labelled at cycle degree 1, 2, 3, 4, 5. 2 may not move beyond the start of 1 below 10.24, but I would expect very strong support if it reaches down to the upper edge of this channel. So this trend line is important. Let's have a look and see how it sits on the weekly chart, where this low here is this point here. As price approached the channel, it found resistance and a reaction downward was affected. Price breaks above the channel here, moves up and away, a test of support. A deeper test of support moves a little in the channel, another test of support here, almost perfectly ending at that channel. And then price moves up and away. Now cycle 2 could be over here. That's the alternate wave count I'm going to consider this week, but I think it's more likely for it to have a normal look, to continue lower, to actually come and touch this trend line. Cycle wave 2 is subdividing possibly as a double zigzag. The first zigzag in the double, complete down here, is labelled primary W. The double is joined by a 3 in the opposite direction labelled X, which is relatively brief and shallow, normal for an X wave and a double zigzag. And now the second zigzag labelled primary Y may be incomplete, with intermediate A, intermediate B continuing further, and then intermediate C to continue lower. When we know again where intermediate B might be over, then we can again calculate a target for C to end, but I would rather use this trend line. Intermediate B may not move beyond the start of A above 93.75. I've drawn a best fit channel around cycle 2. This also is very important. I've drawn the first trend line from this low to this low and placed a copy on this high. If this trend line is breached by upward movement on the daily chart, then I would probably swap over my daily, main and alternate Elliott wave counts. Let's take a look at the main Elliott wave count, which will follow this labelling. The end of primary X up here is this point up here. The daily charts will zoom in on the structure of primary wave Y. This is a main Elliott wave count. It considers primary wave Y is still incomplete, with an impulse for intermediate A, an incomplete flat for intermediate B, and then intermediate C to move lower as a 5-wave structure and find support at the lower edge of the best fit channel or the upper edge of the channel on the monthly chart. The structure here of intermediate B is seen as an incomplete flat correction. Flats are labelled A, B, C, and they subdivide 3, 3, 5. So this wave count sees this movement as a zigzag. This movement here as a zigzag has a really good fit, and now minus C continuing higher as an impulse with minute 1, 2, 3 incomplete, and then we'll have a little 4th wave and a final 5th wave. For intermediate B, if this is the correct wave count, it's extremely likely that minor C would make at least a slight new high above the end of minor A back here to avoid a truncation and a very rare running flat. The target would see that achieved. At 84.16, minor C would reach 1.618, the length of minor A. Now the only thing a little bit not abnormal or unusual, but not the most common look about this wave count is the length of minor B in relation to A. The common range for B waves within flats is from 1 to 1.38 times the length of wave A. Here minor B is longer, it's 1.48 times the length of A, and that's why I discarded this a few weeks, 2 or 3 weeks ago, I think. I did have this previously as a wave count. I was expecting intermediate B could be a flat correction, but when minor B reached beyond 1.38, the length of A, I discarded the idea, but upward movement has now meant that we have to again consider it. There is no rule regarding a maximum length for B waves within flats, but there is an Elliott wave convention that states when wave B is twice the length of A, the idea should be discarded based upon a low probability, and that point has not been met yet. So it's a bit longer than the common length, but not so long as to be a very low probability. This wave count expects intermediate B to continue further as a very common expanded flat. Particularly in a B wave position, expanded flats are extremely common structures. Intermediate B may not move beyond the start of A above 93.75, but prior to invalidation, if this upper edge of the best fit channel is breached by a full green daily candlestick above and not touching this trend line, then the main and the alternate Elliott wave counts would be swapped over. It's all the same to this point here, the end of intermediate A, this point down here, and now this alternate wave count considers what if intermediate B was over here and intermediate C over here. That means it's possible cycle wave 2 could have been over at this last low. The problem with this Elliott wave count is you want to see intermediate B over here, but if it's over here, it only fits as a double zigzag, and that's quite problematic. Here would be the first zigzag, X, second zigzag, but the second zigzag fails to move beyond the end of the first zigzag, and the double zigzag would have a sideways look to it. The purpose of a subsequent zigzag and a multiple zigzag is to deepen the correction when the first zigzag doesn't move price deep enough, and multiple zigzags should have a strong counter trend movement. They should not have a sideways look. So to see intermediate wave B over here would not breach any Elliott wave rules, but it would have all the wrong look. So I don't want to publish such a wave count, and it doesn't meet the rules for a contracting triangle either. So the only structure it would fit and meet all Elliott wave rules is a double zigzag, and that's highly problematic. So it's possible intermediate B was over here as a single zigzag, but now the problem is the structure of intermediate C. It works, but this wave count looks forced because minor 2 and minor 4 are grossly disproportionate. Now, commodities can do this. The fourth wave can be more brief and shallow than its counterpart second wave, but here the difference is so great. This movement really does look much better as a 3-wave structure. Trying to see it as a 5 looks a bit forced, even for a commodity. This is a valid wave count though, and it's not as problematic as seeing intermediate B over here. So what we need to have confidence in this wave count is a new high above 93.75. If we get that by any amount at any time frame, a fraction of a cent on a tick chart is enough to invalidate the main count and provide confidence in this alternate. And considering the huge bullish implications, it's a long way away, but it's not so far away that it wouldn't be useful if this happens. If we see a new high above this price point, this will be the main Elliott wave count. It will be then possible that cycle 2 was over down here, falling short of the big channel on the monthly chart where I expected it to find support. It's possible it may not get that low. This wave count would then expect an impulse for cycle 3 to continue for 1 to several years. And at 257, cycle 3 would reach 1.618, the length of cycle wave 1. Within cycle 3, no second wave correction may move beyond its start below 64.12. On the monthly chart, here is the month of March. It completes as a doji with a bullish long lower wick. We've seen that happen before. This is December 2022. This looks really similar, and yet price just continued on lower. So on its own, this is not a bullish reversal sig pattern. There's a bit too much of an upper wick. Let's see how April completes. If April completes as a bullish candlestick, then we could have a morning doji star forming down here. We won't know until the end of April. Volume is increasing as price is moving lower into March. We've seen that before, though. This is really normal when oil has a strong downward trend. It happened down here as well. We saw volume increasing down to the low. It could increase for a further month. We could see month on month on month with further downward movement and increasing volume. It tells us that the low is coming, but it doesn't necessarily help with timing. We could see another red monthly candlestick with a further increase in volume. So it's important to see how April closes to identify if we have a sustainable low forming here for March. So we won't know until the end of April. Support again about 75. On balance volume has reached new highs prior to price from 2013 back here. And so that's bullish. There's no new range, no new signal on the monthly chart for on balance volume. ADX still declining. There's no clear trend. RSI is neutral. There was no bearish divergence at the high, but I've added money flow to the monthly chart, and there was some pretty strong bearish divergence after money flow reached fairly deeply overbought. Both RSI and money flow are neutral. Neither of them have reached oversold. They don't have to, though. They didn't reach oversold for this slowdown. Well, RSI reached oversold for this important low back in April 2020. Money flow did not. ATR is declining as price moves lower, normal behaviour for this market, and stochastics is oversold. On the weekly chart, price is back within a consolidation. We had a downward breakout. It turns out that breakout was false. We could have a V bottom here forming, but we really need to see price break above resistance on an upward session with push from volume to have confidence that there's now been an upward breakout. So price is back within a consolidation zone with resistance 83 and support about 70. Upward movement has a decline in volume. On stock charts data, there's a gap here because it's within a consolidation. I expect it's a pattern gap. Those are likely to be closed. On balance volume also is within a range, as is price. There's no signal from either. ADX is declining. There's no clear trend at this time frame. RSI, money flow and stochastics all neutral. ATR declines as price moves lower, with stochastics reaching oversold down here, price reaching support. Overall, let's expect upward movement to resistance about pretty close now, about 83, possibly above there, 85 and above there, 93, to continue until stochastics reaches overbought. On the daily chart, here's the gap. Again, I expect this is a pattern gap and likely to be closed. I wouldn't expect the lower edge of that to provide support. Resistance next, about 82. Volume increasing with this upward session and now declining toward the end of upward movement. Overall, not a lot of support from volume for upward movement apart from this one session. Overall, volume is declining and it's below average now. On balance volume is also within a range. ADX at the daily time frame indicates an upward trend. It's not extreme, and RSI and money flow aren't overbought. So there is room for this upward trend to continue. Look for next resistance at 82, above that 83. ATR declining as price moves higher appears to be normal behaviour for this market. That's it from me with your oil analysis. The line in the sand for a bullish wave count is 93.75. It's a huge cycle degree trend change, so we need to see a new high above that point in order to have confidence that the bear market for oil is over. Until then, we should assume the trend remains the same and intermediate B is in a really common expanded flat pattern, which is incomplete. That's it from me. I hope everyone's having an awesome Easter.